First of all, I want to apologize again for the delay. Uh, as I said, we had this technical issue, but thank God we solved it. Okay. All right. Okay. So, with regards to the dollar and the currencies, we had quite an exciting week. There has been a lot of developments taking place, and in particular with the dollar. If you look at the chart that we were looking at, the U.S. dollar. Let me clean up this because we have picked the point. If you remember from last week, the 75.49, which is basically this structural point over here. I mean, this is what we did last Saturday. We said that the 75.49 was, if you recall, we said it is a significant point but not a structural point, and a trade above the 75.49 or the 75.50 would trigger a short covering rally. Okay, and this is what happened. And if it breaks above the 75.49 or the 75.50, it should take us to the next significant point, which is again the one that I highlighted, which is the 76. You can call it the 7600, and this is exactly what took place. It broke above the 75. The short covering started to come into the market. It took us above the 76 or the 75.94, and it went all the way and placed a high at 76.50. Okay, now once a situation like this happens, guys, and you see this kind of move, then then you want to make sure that you start moving your stops to protect your profits, because now this was one this was the trigger for the short covering rally. That was now the continuation by taking it above the real structure point. Therefore, you don't want a failure. You don't want it to fail or to turn around and come back and trade below the 76, and that would be technically the your stop or your exit, or if you really are aggressive, you could reverse. But that here now is a negative sign for the dollar. It is not yet, it is not a good sign. Now, having said that, how, when I say it's not a good sign, how bad is it? What degree of not a good sign would that be? First of all, we don't want it to have done this. This is something that we would have hoped it shouldn't take place. Now, coming to sell and having this sell-off that took place on Friday and trading all the way to 75.35, which is way below that structural point. It traded below it, and if this was a genuine break, if this was really a true reversal, This should have been the case. We should have had at least a close like this, way below the 75.46. But what happened over here, we broke below the 75.49, and we're sitting right back at it. So even though it is negative, but we can, there is actually some positive coming to it, because all what we had was a sell-off that came down to the next level of structure, and it held. It did not have a follow through, we did not have a decline, we did not have a capitulation below this point. So having it hold over here, that is a, could be considered a slight buy signal rather than being an absolute sell. So I would be kind of neutral for the US dollar. I would not be looking at selling the US dollar. I would be looking, as I said, to be neutral, and I would be using the structure point for the dollar. I would be say, with that kind of close, I might be mildly positive, because I have my short covering and it's still held above the short covering trigger, and that would be considered as a positive, not completely a negative point. The second pair I want to look at is the British pound, and of course you can see here that this is way below the 162.23. With all the capitulation and the sell-off that we had in the US dollar, we basically had kind of an inside day in the pound, so we were unable to take a daily high or a daily low. We did not even close, we closed at 2 days low. We could not even trade and hold above the 2 days low. So that tells us that the pound is basically weak. So the pound is the dollar, we are neutral or slightly positive to the dollar. The pound, this is weak. And if we look at the Australian, the Aussie is still within this congestion area, so it's coming back above the 104.86. It closed the week at 104.90. The Aussie is really doesn't give us any. It's still in the midst of a congestion area. We really, it's not one of the things that we're going to be too excited about. It's not one of the pairs that we're going to be really too excited about. If you look at the Japanese yen, this is now quite interesting, because last week we were quite negative on the yen. We had some follow through to the downside, but on the last 2 days, Thursday and Friday, the yen kind of exploded to the upside, and it closed above the structure point, which is the 104, the 124.78, and it was able to close above that price point, which means that there is a lot of buying coming in to the yen, and we have to be, again, consider that as a sign of strength, because the close is very strong, and it makes our life very easy, because the close is 98, Our selling point is 78. So all this week is lining up that we have very close buy signals and very close sell signals because we're all close above or below one of the structure points, or so it makes it quite it's going to make our life much easier. Now come the key one, which is the euro. And the euro, what we had over here is again one big move to the upside. We have the 142.47 based on the index, not on the future. That is a positive sign. We're not going to argue with that. It is a positive sign, and therefore, if you can see now, look at this. This is 76. Your selling point is 47, so 20 pips. If you look at the Japanese yen, 98, your selling point is 78, 20 pips. If you look at the dollar, your selling point is 46, your buying point is 49. So it's sitting right there at these points. If you look at the, again, as I said, the Aussie is in the middle of a congestion, so we're just going to be neutral on it. But the one that we have to really keep an eye on is the Swiss franc. And the reason I say that is the Swiss franc is having or the Swiss in general, they have a major dilemma. What you see right in front of you here, this major, humongous uptrend of something that have appreciated in value about 35%, is an indication of the difficulty that the Swiss government is having with regards to its economy, with regards to, I mean, just think of tourism. Who of you would like to go now, based on this rate of exchange, to go to Switzerland to spend a holiday, or to go to the United States where the dollar is like that? Who will get a bigger bang for the buck? And if it's affecting tourism, it's going to be affecting their exports, it's going to be affecting everything that relates to their economy, and it's definitely having a negative impact. They have tried several times to support the Swiss franc by intervening into the market, and they have failed. They have invested last year close to $40 billion, and this is the mark or the sign of how they failed, or how they threw away this $40 billion, because it couldn't, that intervention did not do anything to the market. So we are still going to consider the Swiss now as the strongest. So in this case, we will be, let's say, we will say the dollar slightly positive on the dollar. We are going to be quite positive on the Swiss franc, also quite positive on the Japanese yen. The euro, the British pound is basically quite weak because with all this capitulation, so I will be negative on the British pound. The same thing with the Aussie. I mean, I can be slightly neutral on the Aussie. And let's see the euro again. The euro, we just have to trade what we see, not what we think. So if it stays above the 47, we are going to be looking at buying the euro. So right now we are neutral to positive as far as the euro goes. So we're going to be slightly positive for the euro. And let's see the CAD. Family wants to see the CAD. Uh, I mean, I, it's above the 101.26 family, so, and it moved up from 26 and it closed at 101.70, so it's a decent move to the upside, and so we should be positive on the CAD, but again, I mean, it's, you just have to use a little bit of a grain of salt on that. For the euro, we can be, let's go back and see the euro. Yeah, absolutely. I mean, the euro, I mean, this is having closed above the 76 Lindley. I mean, this is quite a positive sign. So, yeah, I can give it a double plus because that's good. So, yeah, we can do that. That makes sense. I agree with you on this one. So we can make the euro so we'll give it a double plus. So in this case, so that we can arrange our pairs, so I will be looking to be buying the euro as long as it's above the 76. I might be looking at primarily short, going long the euro pound, maybe going long the euro Aussie, maybe going long the euro CAD. Okay. uh, I have to be looking at the British pound. I might be looking at shorting the pound dollar and maybe shorting the pound Swiss, and I would be looking also at going short the pound yen. I can look at going long the euro yen, or guys, you can look at the Aussie being such a neutral pair to find an opportunity, or uh, an opportunity to see if anything is weak with the Aussie to try to find an opportunity for it. Okay, Lindley and the new guests that are with us today, wait until I'm done with, and I'm going to say any questions and pop in your questions, alright? Thanks. Alright, so this is basically the hierarchy what we're going to do. I'm just going to repeat it quickly. So we're looking at being buyers of the euro and the Swiss. We're looking at sellers of the pound. We're looking at sellers of the dollar. We're looking at selling this of the euro, pound, long euro, short pound, long euro, short dollar, long euro, short Aussie. I can go the pound Swiss, short the pound, long the Swiss. The same thing with the dollar, and the same thing with the Japanese yen. You want to be long, you want to be short the pound yen, and if you have a chance, we might see the situation that we have with the euro yen. So we want to be focusing at buying the euro and the Swiss, and the weakest one as is the pound and the US dollar. Okay, so let me save the recording and